Good morning, traders. It's 8:02 a.m. Chicago time, 9:02 a.m. Eastern on Thursday, the 19th of May, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Overall, the market's sideways overnight. We still have a risk-averse sentiment. There's still some flight to safety. The three products that I'm monitoring in the future space that are up right now are the US dollar, again gaining 0.42%, trading at 95.46. The US Treasury bond, again up 0.33, and the notes are up 0.07. And the rest of the universe I'm watching is down, with gold being the worst off, down 2.24%. Gold has dropped as far as 1244.60 overnight. Crude oil is also down. It's back down to 47.85. It was as low as 47.45 a barrel this morning, followed by the DAX, Euro Stocks, Russell, the Euro, Nasdaq, S&P, and so on. So for now, the market's still sitting on the sidelines, and funds are moving to safety. Moody's downgraded U.S. growth. The credit rating agency trimmed its 2016 U.S. growth forecast at 2% from 2.3%. The Fed rate hike probabilities have been pulled forward. The April Fed Open Market Committee meeting minutes were released Wednesday. They suggested that if conditions are right, the Fed may raise rates in June. While this is not particularly new, it still creates some pressure on the market, and that's why we're seeing it in gold. And that's really it as far as key releases. Fed's Lacker spoke this morning and said that he would be comfortable with 4 rate hikes in 2016. Markets took the wrong signal from the Fed in March and April, overestimated how likely the Fed was to pause. So that's where we are. The Philadelphia Fed business outlook came in much worse than expected, negative 1.8 versus positive 3.0 expected. Initial claims 278,000 versus 275,000, slightly worse. Continuing claims in line to slightly better, 2.15 million versus 2.16. Those are the potential drivers here for the session. As far as what we're looking at ahead, a half hour after the cash open, we're looking at the U.S. leading index. For April, we're expecting 0.4. The previous is 0.2. And then, of course, at 9:30 Central, 10:30 Eastern, we're looking for EI natural gas, expecting 77, priors 56. And as far as the speakers, I'm not seeing. So I'm seeing 8:15 Fed Speaker Fisher. So in about 9 minutes, Fed Speaker Fisher. And then at 10:30 Eastern, 9:30 Central, Fed Speaker Dudley. And then at noon Central, 1 Eastern, BOE Speaker Vlay. Not sure how to say that name. But that's how things are shaping up right now. Let's take a look at what we had yesterday. Yesterday we saw a move through both hypotheses, interesting enough. Here's what was expected. This is our Hypo 1 here yesterday. Let's maximize this. Hypo 1, the expectation was we would push up, we would open out of range or so. But in either case, we're looking for an open auction. And then the expectation is we would push into the low volume node right in the 49 area. I did post this image yesterday, 49 area, and I'm looking for it to rotate and push down into the 3050, with the 2026 being the key figures mentioned during the trader bite yesterday. Hypo 2. Hypo 2, again, open auction, in or out of range, a test lower, and then the expectation is for a push to the point of control at 56.50. Um, so Hypo 2 is looking for a potential to gather buyers early on and then rotate up into the prior day's point of control. Remember, 35 here has been a very strongly supported liquidity level for a month now, and so we expected some sort of support there. Here's what actually happened. This is a 15-minute. What actually happened is we opened at 2039, tested down, pushed into that LVN, had a rotation down. It pushed through the LVN actually by 3 points, had a rotation down to about the mid here, and then we continued higher with the FOMC minutes coming in right here. The market ended up taking out the prior day's point of control. So essentially what it did is until it broke through this 49, we still had the potential, let's clean this up, until it broke through the 49, we still had a potential for a test down into the 30-50 under Hypo 1. But instead, what it did is it turned over and it pushed through. So we had Hypo 2. I'm going to tell you that it was very difficult to trade this. Um, I'm sure others saw it a little bit better, but there was really very little to lean on um, in terms of liquidity in the market. Some pretty decent moves on the FOMC minutes. The FOMC minutes ended up hitting that a Hypo 1 target. So we hit a Hypo 2 target right here, and then we hit the Hypo 1 target down here. And then we finished in the middle. We had a neutral day. Could have been a neutral extreme, but we had a neutral day. But overall, if you recall yesterday what I talked about on that big head and shoulders that was forming, overall, we're continuing that pattern. Let's extend this out. So we're continuing this head and shoulders pattern right here. And I did say that the 2026 is a key figure in this pattern. So again, here's your head and shoulders on the daily. This looks fairly weak to me. We are revisiting these lows many, many, many times. Generally, that basically says the market's not seeing excesses as in terms of excess down here. And if it does not see an excess, what it does is it generally trades in that area, accumulates energy, and then slips through. And you can see that we've been in this really high volume node over the last few weeks and well before it earlier in the year. So it's this area is very, very, very mature. So at this point, I have to assume that we're still looking at this head and shoulders breakdown. But anything is possible. There's a lot of news floating around. But following the technicals, I'm skeptical of any rallies until we get back above the 65, this figure right up here. I'm looking bearish. I'm looking to sell any rises back down up until 65 for today, tomorrow. That's the LVN for this zone here. If we bring this this profile forward, we see that all we're doing is extending it out. Actually, sounds like my headset's about to die. Unfortunately, I didn't set it properly to recharge. So let's get to the to what's expected today. The overnight session is in complete balance. The expectation this morning is for a choppy open auction out of range. I expect it to test down, and then I'm expecting it to rotate back up again. That would be Hypo 1. Hypo 2, I'm expecting again an open auction, an attempt higher, an attempt lower, and then I'm expecting it to just pause here. We have shifted the point of control down. We've continuously shifted the point of control down, and I'm expecting it to move down today. So I'm expecting a bulk of trading to happen in this lower end of the range. That's what I'm looking at Hypo 2. Just a pretty choppy open and generally a market that is stuck in the middle here. I'm going to cut it off right here because, again, my headset's about to die here. But hopefully you got something out of this. As always, pick your spots, be patient enough to find your setup, find your edge, and then respond to that. I want to remind you again, the AMA from Wednesday has been posted. It's on my Twitter feed. It's also in the description of this YouTube video. Good luck, and I'll catch you tomorrow. Take care.